Hello and welcome to the Finance Mentor Guide on how to manage your business finances. When I say financial management, how many of these images are popping into your head right now? How many of you are thinking it involves piles of paperwork, spending hours in front of a computer, worrying about where the cash is coming from, looking at financial statements that you don't understand? Well, I'm here to tell you that it's not all about that. It's about what all business owners are striving for. Financial management is about making the most of the money that you have, understanding what works for your business and what doesn't, and about taking control of your situation and making your business the best it can be. In this session, we're going to look at what that means for you and your business, and how, by taking control of your finances, you can grow a successful and prosperous business. So, where do you start? Well, you need to set aside some time to understand three things. 1. What you're trying to achieve. 2. What your situation looks like now, and 3. What you want it to look like in the future. And then do two things regularly. Firstly, quantify your actions before you make a decision, and secondly, monitor your progress and adjust your plan. These actions will help you make informed decisions and keep you in control of your financial situation. It's much better to have informed decisions which are based on fact than to try ad hoc approaches which may or may not work. So, what is it that you're trying to achieve? It might sound like one of those stupid questions, but it really isn't. It takes time to figure out what you're wanting out of your business. The plan has to be specific, it has to be well researched, and it has to be achievable with the resources that you have, at least initially. So I would encourage you to ask yourself these questions. What will your business look like in 3 years? Who will be working for you? What will your office look like? What sales will you be making? How much cash will you be able to take out of the business? And how well known will your company be? When you've grown your business in 3 years' time, what will your customer look like? Will they be individuals, medium-sized companies, or multinationals? What will those customers be buying? How much will they be spending in your business, and why do they come to you rather than anyone else? The last question is perhaps the most important question to ask yourself. What will your life be like in 3 years' time? Will you be managing a team of people and have the responsibility of finding work for them and running the company, or would you be rather letting someone else do it and take a more relaxed role in your business? I would encourage you to get out a large piece of paper and create a vision board like the ones showing now. It can be in any form you prefer. You can doodle it, cut out pictures and stick them onto a piece of paper, or use a PowerPoint presentation. Whatever method you choose, having a vision board is the start of you committing the image of your business and lifestyle to paper. You can use it in the months ahead to keep you on track and inspire you to achieve great things. But what has this got to do with numbers, I hear you ask? Well, that's a very good question. Numbers and accounts are there only as a financial result of the actions that you have actually taken. It's true to say, then, that if they are a result of what you do, then likewise, what you do affects the financial results. Financial management is about having the right information at your fingertips to ensure you make informed decisions and take the right actions to achieve your goals. But don't just answer these questions from your own perspective. It is vital to get other people to answer them for you and research what other people in the business world say about them. Take time to talk to other people in business about your ideas and aspirations. What do they think? How achievable do they think it is in their experience? Do they have good advice you can incorporate into your plans? When they started in business, how did they manage their cash? And looking back, would they have done things differently? It can sometimes be difficult to listen to advice, but it really does help in the long run. So take time to research your plan in a number of these ways before you put it into action. By using these tools, you should be able to visualize your future business. Now it's time to quantify what that business looks like. So take each of the pictures you have and assign a value to each of them. This will give you an annual running cost for the future business. Then decide on the profit you need to make. In other words, how much money will be left over at the end of the 3 years to reinvest in your business. Add that profit to the cost figures and you will come up with a gross margin figure. If you have a gross margin percentage on your product or services, you can use that to calculate the sales target. Here's an example of a worked model. You can double-click on the model and enter your own figures if you like. Now, as I said earlier, financial management is about making the most of the money and resources you have. When you can clearly see what it is you're trying to achieve, you can make sure you invest your resources in the right areas. It's all about taking control of your situation and making your business the best it can be. At this stage, you have a picture of that, both visually and financially. Next, we're going to look at how you get there. So, you know what it is that you want to achieve, but you have to start somewhere. So let's start by looking at your current situation. You start a business with a limited amount of resources, time and money. So the first decision you need to make is how best to utilize those resources. But to do this, well, you have to get real. What do I mean by get real? Well, I mean be wise with your cash. There is no point deciding to spend your cash on fancy premises, great business cards and a flashy brochure if you only have enough cash to see you through the next 3 months. So the first thing that you need is a list of the cash you have available and work out how long that will last, assuming a normal level of spend on your part. I've devised a spreadsheet on the next sheet. Let's go through the spreadsheet together and work out how long our cash will last. You can double-click on this spreadsheet to enter your own figures. This example shows various monthly outgoings and then calculates an annual cost. We're going to focus on the monthly cost. In this example, it shows that we need at least £1,880 to cover our monthly costs. So, if you start out with £18,000, then you can go for 10 months without bringing in any sales. But if you only have £3,000 in the bank, then the decisions you make need to bring in sales quickly, or you need to find emergency cash from somewhere before you start. Depending on your situation, this can either give you comfort or it can scare you into making some silly decisions. At least it would have done before you watched this slideshow. Financial management is all about knowing the reality of your situation and controlling it. So let's look at how you can go about quantifying these decisions. We're going to hear about a lady called Jane. She's starting a web design business selling to tradesmen. She has just left work to start this business after saving for months. She has 6 months' worth of costs covered in the bank, plus a small amount to invest in marketing. Her marketing budget is £1,000. She's seen other websites and talked to a few people who have made the following suggestions. 1. That she gets a glossy brochure printed to send out in the mail to her target market. 2. She gets a marketing plan done by a professional. 3. She pays for a Google AdWords campaign. 4. She goes out networking and meets people who could use her services or recommend her. And 5. She joins LinkedIn and gives out free advice and enters into discussions. They're all worthwhile suggestions, but she only has £1,000 to spend. So how does she choose which one to invest in? Well, a good place to start would be to look at the costs. She finds out that it costs £2,000 to get a quality brochure printed, so that's that one out of the question already. 1 down, 4 to go. A marketing plan will cost £600, but she wonders how quickly the plan will lead to sales. And as it will eat up more than half of her budget, she decides against it for now. She looks into a Google AdWords campaign. Web design is a highly competitive market, and the cost could escalate quickly, so she discounts that idea. After all, she can do SEO herself. Someone has recommended a good networking group, and it costs just £30 every 2 weeks. Then to get some business cards printed will cost another £50, so she decides that that's one of her options. But how quickly will it lead to a sale? And when it does, how much will that sale be worth? Well, after talking to other people, she estimates that it could take her 6 months to win a job. So if it does take 6 months, she will have paid out for 13 networking sessions and bought business cards for £50. That's a total cost of £440. One sale to her is worth £1,000, so she would have doubled her investment if her plan works. Now to LinkedIn. She doesn't know how it works, so she will have to invest in a training course. So many people in the business world keep telling her that it does work. But her target market is tradesmen. How many of them are on LinkedIn? Surely it's not as relevant. Perhaps Facebook is a tool to use on this market sector. She knows quite a lot of them through personal contacts already, so she decides to go and open a free Facebook fan page instead, and puts links on her website to promote it. That didn't cost her anything, and it was right for her particular business. Can you see how going through a logical process, questioning how much each decision would cost, and estimating the financial benefit it would bring to the business, kept Jane in control of her cash? So let's recap the process. One, establish how much it will cost. 2. Estimate the financial benefit of your actions. 3. Estimate how long it will take for the cash to be in your bank account. 4. Consider whether it actually suits your target market or your plan. Look at all the options you have available to you and ask other people, but remember to remain objective at all times. I have already said that financial management is about making informed decisions. We covered that, but it's also about making sure that you have a comprehensive monitoring system and that you're reviewing the results of your actions regularly. This is where the numbers really start to make a difference in your business. You may or may not have heard the term management accounts. These are the numbers you look at in your business on a regular basis to establish how well you're doing against your original plan and how well you're managing your cash. It is vital to start this monitoring system as soon as you set up in business, especially when you're starting from scratch. You learn so much in that first few months, and things change so quickly because of that. By starting the process now, you will be building a solid system for the future. At first, it needn't be too demanding. I suggest that you put a few of these simple principles in place now. Having a cash flow forecasting system. Now it sounds worse than it is. It's just a spreadsheet you can use to estimate when money is coming in and when it's going out. Make a list of what you are going to do, the actions you are going to take. Note down how much it will cost, what the financial benefit will be, and when you're expecting it to happen. Set up a bookkeeping system. Keep all your receipts in monthly envelopes, enter them on an accounting system or on a spreadsheet each month, then file them somewhere safe. It only takes a few minutes and it will get you into the habit of good financial management. Review your bank statements regularly. Keep an eye on what you are spending your cash on and take immediate action if you are wasting your money. Check out who hasn't paid you yet and establish what you can do to get the cash in quicker. Take time to think about all the actions you've taken in your business. What was good? What was bad? What should you do again? And what should you stop doing? And have the confidence to change things as soon as you can to maximise your success rate. The Finance Mentor training course has been designed to take you through managing the finances of your business and maximising the return you get from your investments. This introduction was merely a taster of what you can expect from me over the next 12 months. Together, we will go through the things we have discussed in this presentation in much more detail. I will give you tips on how to do the things we've talked about, like setting up a bookkeeping system or using a cash flow to control your money. I trust that by listening to today's introduction, you will begin to realise just how powerful the numbers can be in helping your business grow and increase in profit. I'm looking forward to helping you build your profitable, successful business.